Cynthia, thank you so much for joining me. We're sitting here in the SoFi Rams Hospitality Suite in downtown LA. This is so exciting. It's gorgeous here, and I'm really excited to bring this episode of the podcast to everybody with somebody from the NFL. We've got two ladies on a couch talking about football and finance. I don't think it gets much better than that. So what we're going to do today is draw some comparisons between what you do and what I do, which is a lot about data and analytics. And it turns out that actually analyzing investments and analyzing athletic performance are pretty similar.
There's a lot of similarities. First, I want to point out, I really wish that I hadn't eaten breakfast because this hospitality suite is incredible. It's actually like a nice day. You can see like there's snow-capped mountains.
I know.
Who knew LA was so pretty? I live here. Who knew it was so pretty? All of the seasons. And yeah. So no, I'm really glad to be here. And I do think there are a lot of parallels because I did actually come from a banking background in order to do what I do now. So I think some people get into analytics and sports analytics through the statistics way, and those people are really academic and much smarter than me, but I needed like functional, like I need to be mindful, like you have a limited amount of time. There's 1 week between each game during the regular season. In the draft, there's just a couple of minutes between each draft pick. So all of the areas that you can help find undervalued players, undervalued situations, you have to be mindful of time. So I actually think having a banking background is really advantageous for what I do now.
Oh, I bet. I mean, it's perfect, really. And I mean, at the end of the day, we're both in the game of predictive analysis, right? So I'm trying to analyze trends and look at the fundamentals of an investment or a stock or whatever the case may be in order to help people make the right choices going forward with their money. You're trying to analyze athletic performance, and we'll talk about all the different ways that you do that in order to help predict or help teams make a better choice in their drafts, right? And I think that it's important to keep in mind that there's always this kind of fudge factor. So we can analyze stuff over and over and over again ad nauseum, but it's all still humans, right? That we're trying to track and that we're trying to beat, so to speak. So there's always this factor that we can't quite get to, but we're going to get as close as we possibly can.
Yeah, it's really, the funny part is, at least in sports analytics, people are like, oh, like you hear broadcasters during the game say, the analytics say they should go for it on fourth down here. And that's not actually always true. So it's funny because it just kind of becomes this like mishmash of words that don't mean a lot. Just kind of like there are pundits who say like, you should buy this stock right now. And like they don't have any, like they're not really backing it up. So it's really interesting to see how they've kind of coexisted. And these words can mean absolutely nothing. And like analytics and what can mean almost nothing if you're not actually doing something that's really not that sexy, which is like being incrementally better each time. And that's it sounds so sexy. Oh, in game you're picking this. No, it's just getting a little better on each play, not really being one play being really deciding the entire game.
Right, like singles and doubles, right?
Exactly.
Wrong sport. But singles and doubles,
right?
Instead of always swinging for the
just
fences.
Get a first down.
Yeah.
Or stop a first down.
Yeah. Well, so now I'm interested, now that I just said that, what brought you to football? Why football and not baseball or basketball or hockey or whatever, curling? I don't know, any other sport.
This is going to sound like the biggest brown-nosing answer.
Okay.
But the answer really is Anthony Noto, because he was the CFO of the NFL at the time when I was in business school looking for my summer internship, and I wanted to be different and interesting. And he used to work at Goldman Sachs, and I used to read his research reports. Wow. And I loved his logic, and I really, when I was banking, Noto's coming out with this, blah, 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 this whole thing. And then when he went to the NFL, I was like, well, I'll cold email this man and see if this will work out for me. Literally.
Wow.
It's all, yeah, that's truth.
I heard he used to have a report called Noto's Notables. I've never asked him about that. I'm going to ask him today. Somebody told me that once. He used to have a report called Noto's Notables, and it became this like big thing. But anyway, I love that. I love that it was Anthony that brought you here.
It was Anthony. Like I wanted to be around smart people who were doing interesting things, and it's funny, like in media we always do like alliterations like way too. So Noto's Notables is like pretty funny.
I know. Okay, so here's what I want to do. We're going to take a bit of a unique approach to this podcast. I'm going to run through a few topics, 4 or 5 topics, and we're going to talk about them from your perspective. How do you analyze them? What does that look like from an athletic perspective? And then I'm going to give the finance perspective on the same thing. And here's what I'm hoping for everybody listening. What I'm hoping is that if you're intimidated by the idea of financial analysis, or you think that you don't know enough about statistics, or it's not applicable enough to everyday life, it's too hard to grasp, that drawing some of these comparisons with something like sports that I think we all understand, and obviously we're doing this around the Super Bowl, so it's football, that hopefully drawing those comparisons make this seem more approachable, and we can realize that it's in our everyday life no matter what. It's all about data. It's all about analytics. You just don't even know you're doing it. So you're already good at this. You just don't even know it. Okay, first topic, time horizon. And when we talked earlier, it sounds like there's a perfect time horizon that you've identified for analyzing athletes and performance.
Well, it's whatever you have access to. We measure. We have the cadence of our season is really smartly thought out, right? Like you have, the Super Bowl. Okay, let's pretend that that's like the end of one season. And then we already start this draft season. So the draft season, and you get all of your information about their college results. And most players have been in college. I mean, they have to be for 3 years. There's rules around these things, right? So then when they become draft eligible, then we get to analyze them at the combine, and we measure them all with the same measuring stick, or many with the same measuring stick. And then we have pro days, and people ask questions, and the film is there. And then, the draft happens, and then you reset your team. By the way, free agency also happens between the combine and the draft. So you have some free agent players, and then you get to pick the new ones, and you pick this blend, and then that blend you get to work with them until the season starts. Basically, there's some time off, but ultimately your preseason, everything starts around the end of July, and then come the Thursday after Labor Day, you are gone and you're off to the races, and everyone's kind of got the same schedule. We added a game this season, but there's one bye week, and then there's 17 games, and then the playoffs, and then it's all starts again. So we have a really good seasonality, meaning we can see year over year trends. We can see how often things change. Like, when I look to see I use historical references to kind of figure out what it's like a doppelganger, right? Who are these guys that are home run hitters versus who are the guys who are singles and doubles hitters, right? Right. Yeah. So, but what you look at is you say in this, how do they compare year over year? The seasonality is perfect.
And when you look at somebody historically, so, and let's not talk about maybe ones that are fresh out of college, but a player that's been in the NFL for a while, let's take somebody like Tom Brady, for example, who's been in for a long time, right?
Lots of data.
Yeah, right.
I like that one.
Plenty of data. Somebody like Tom Brady, where there's a ton of data, do you look at what he did in his first 2 years, or do you look at what he did in his last 3 years?
Well, we've got 22 moving parts on every snap. So 11 on each side, obviously. But you kind of, for me, I found that like with current players, about 8 years of data is right, because you see trends changing. The supply of guys coming out of college, they're changing. Like the defenses are now tend to be a bit smaller to reflect more passing and a quicker offense. You don't see as many traditional like running backs like you saw like a lot of years ago. Running backs now are much, used in the passing game much more frequently than they were even 10 years ago, 15 years ago. So you kind of look at about 8 is great. But when you have data like the Tom Brady stuff, it's really interesting to see over time how areas he's gotten better, improved, and how the other players, because, if you have a really great wide receiver, it actually helps the quarterback with the types of passes that receiver can catch, right? Yeah. So you get a lot more information with different types of players on the field with a guy like Tom Brady. Then you can say, when he has a true number one wideout, this is more right. And when he doesn't, it looks more like this.
Yeah. Okay, so 8 years. 8 years is the sweet spot. So when we think about it from an investing perspective, I think I would draw a couple parallels. The season that you talked about, right, would be less than a year of a time frame. I'm going to call that short-term investing. Yep. And number one, it comes with higher taxes because you're paying short-term capital gains. Yep. If you got a gain, right? So you pay higher taxes in it. And I would also call that a space where you're sort of trading, or you're swing trading. So not necessarily day trading, but swing trading, where you're in a position and you're out. There's limitations on how you can do that from a wash sale perspective, but that's more of a swing trading approach. And it's not usually something that I suggest that people do. So then we move on to what's the next time horizon in investing. You hear a lot of active managers, and I used to analyze active managers for a long time. You hear them say things like, well, it should do well over a full market cycle. which is this sort of abstract concept. Nobody knows what that means. A full market cycle is usually defined as about 3 to 5 years. But the tricky part about this is those cycles just keep getting longer. So we can't even say 3 to 5 years anymore. They're getting longer. Lastly, a long-term horizon. So you hear people like me say things like, well, if you're going to hold it over a long-term horizon, you wonder, what does that mean? That usually means 10 years or more. So if your time horizon as an investor, let's say you're 30 years old, you've got plenty of time until retirement, you don't expect to become a billionaire overnight and retire at 35, you've got at least 10 to 15 years before you're even thinking about what will I do next? When will I retire, right? But in reality, if you're 30, you probably have 25, maybe even 30 years before that's happening. So long-term time horizon is 10 plus years. The trick, though, in investing is that most people don't have a 10-year stomach for all of the things that are going to wax and wane,
Coaches
right?
get fired.
Right.
A lot.
Stuff
Yes.
changes, right? And over 8 years, stuff changes. And players change their minds, right? Or teams lose momentum. And we'll get to that, too. I don't want to spoil my own question. But teams lose their momentum, or things change. Maybe a team gets sold or bought, or it moves cities, and everything changes, right? Or they change their name, like what happened to Washington.
Oh, boy.
Okay.
Next.
All right. Next. Next topic. All right. Historical references. You talked about this a little bit already. You call them doppelgangers. I mean, there's obviously a lot of historical references I can talk about, which I'll do afterwards. But talk about how do you analyze somebody that doesn't have that history, right? So what's the doppelganger concept, and how good is it at actually predicting their success?
Well, so in football, everything is taken in context, right? Context of the market conditions are different now than they were in 2020 when the pandemic started. So different stocks are going to perform well. If you're put in a 43 defense or a 34 base defense, you're going to have a different opportunity to sack the quarterback, for example. Aaron Donald is a very good example of a guy who, coming out of the draft, people didn't know who to make the comparisons to because he's a bit undersized for an edge rusher, but they knew he was pretty prolific and he was going to be kind of good, but he went to Pitt and they did question the competition he was coming out with. I mean, he's turned into the best defensive player in the league, and it's not even close. But it had to be in the right system, right? So the context of figuring out how someone will perform in a given system is tricky. Some positions it's a bit easier for than others, but you try to find, okay, do they fit into height, weight measurables? That's an older school sort of, do they fit like the prototype, right? And then like, are you a 6'4" quarterback? That's great. You can see over.
The prototype for that particular position?
Prototype by position, right?
Okay.
And if you don't, then what else can you do? Well, now you've seen quarterbacks. Kyler Murray's a good example. He's out of range, too short for a prototypical quarterback, but his ability to run completely changes the opportunity for him for what he can do on the field, right? But that only works if you get the right O-line, if you get the right receivers, if you get that. So it's all figuring out how everything works in context. So does this Rams defense look like a historical defense of X or Y? And how did they perform against an offense that looked like X or Y, right? So both, when you look to see, both teams have great number one receivers. Jamar Chase really emerged as a rookie sensation, and Cooper Kupp, he's kind of leading every statistical category receivers can. So how do you shut down each one of those? Each team will go about it in a different way.
Okay. So sometimes accurate, other times not. I mean, some of the things, especially in investments when we talk about historical references, it's tough to look at a stock compared to its own history, right? Because that history is through different environments. But the interesting part about it is that that's the only certainty we have, right? And at the end of the day, I think what we're both trying to do is reduce the amount of uncertainty that's out there. The only thing that's certain is what's happened in the past, right? We have no idea what happens going forward.
You've got to keep rebalancing your portfolio.
Yeah.
So when you get who's coming out in the draft and what free agents are available, because remember we have a salary cap. So you're a money manager and you have a certain amount of salary cap each year that you must spend. There's a floor, ceiling. There's a construct for how it must be spent, and you have to rebalance your portfolio given the potential stocks and your performance needs to be W's. That's what we measure in, right? So if you can maybe you don't get the most expensive free agent wide receiver, you get the third or fourth one, meaning then you can afford the better left tackle, or you have to construct your portfolio in a way that reflects the best historical information that we have. And then there's a ton of uncertainty with the draft class. So minimizing your uncertainty means figuring out how to balance your portfolio in a way that reflects the best information you have about the past, but also got to pivot quick.
Yeah. Well, and how it mixes with all the other assets, right? And that's, I think, a really important thing for investors to remember. People fall in love with their stocks.
Oh, for sure.
They fall in love with a name, or they get excited about the hype that's going on around a certain name, and they want to hold it just for that. And they forget to look at how it interacts with everything else in the portfolio. Right. And then they never want to sell it, right? When they really should sell it. Mm-hmm. And that's a tough decision to make. So I'm going to give two examples very quickly about historical references right now in the market that one's going well, one's not going well. The one that's going well is that historically, we're heading into a rate hike cycle, right? So in March, we're expecting the Fed to hike rates for the first time. Maybe it's 25, maybe it's 50 basis points. Historically, cyclical sectors have done well into that rate hike cycle. So cyclical sectors like financials and energy and materials, even some of the defensives, which I'll call value sectors like utilities and staples, that is holding true. So those sectors have done well in the start of 2022. I would expect that to continue as we head into that first hike. So that's one of those historical references that we can look back on and say, okay, perfect. Things are working exactly as they should, right? And I like it when things work as they should. One that is not going well, that is the absolute bane of my existence right now, is small cap stocks, which are usually supposed to do well in inflationary environments. They're the only asset class that has beat inflation every decade since, I think, the 50s, except that is a complete flop right now. Small caps have not been doing what they were supposed to do. So it doesn't always work. It's really hard to do. But again, the best that we can do is minimize the amount of uncertainty. Okay. Third one, and this is a biggie, and I think that these comparisons are really interesting to draw. So this topic is fundamentals and momentum. We talk about, as investors all the time, you have to analyze the fundamentals, you have to watch the momentum of a sector or a name or whatever it may be. Same thing goes for sports, right? So you analyze athletes based on what kind of fundamentals? What would we look at?
Matchups. Well, in the game scenario, you want to look at matchups. You want to look at kind of things that they've been able to reliably perform at, right? Like, so, Tom Brady, for example, when you wanted to go back to Tom Brady in that
example. Use Aaron Rodgers instead.
Oh, okay.
I'll take that.
Great. Aaron Rodgers can throw a deep pass. We've seen that. I'm a Lions fan, so there was that Hail Mary that one time that, anyways. But like there's things that about Aaron Rodgers, for example. You know that if he's outside of the pocket, like, look out. It doesn't matter. He's going to compete. He's going to find Devontae Adams. These are things that are so.
Or he's going to run himself.
Right. Yeah. But if he's out of the pocket, he's like almost more dangerous. Like it's lights out then. But you look to see, okay, who is this person? And then you want to say, like, okay, what is the scenario around them? Is the left tackle okay? Is is everyone hurt? Or is Aaron Jones playing this week? What are the other scenarios that's happening? Because he's still going to be who he is. But to be at his best, he needs to have X, Y. I mean, Devontae Adams needs to be there. I mean,
right.
There are some stats to show that he's better with that. You know what I mean? Like, in general, he needs to have his receivers.
They're good as a duo.
Right, exactly. Yeah. So, and then when you talk about momentum, see, I think sometimes in sports, people get a little nuts with momentum because they think like, oh, the momentum shifted when they had that pick six in the third quarter and blah, 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 blah. And they're like, we can feel the energy. We can feel the things that are different. I think that's interesting, but the data doesn't actually always support that. The pick six means you've now earned 6 more points, or maybe 7 or 8, depending on what happens after the. So to me, the momentum is, what have you been doing the past 4 games? How have your assets been performing over 4 game sample set? So like the most recent 4 games, or if it's a divisional opponent, there are some, because you play the same opponent like several times, like we saw the Rams play the 49ers 3 times. And how have you been adjusting to, like, have you been breaking with your natural tendencies or not, right? In order for the Rams to beat the 49ers, remember that's the 7th matchup between Kyle Shanahan and Sean McVay, and that was the only one that Sean McVay has won. So, and why? Well, they broke some tendencies on their defense. They didn't do things that they had to be different purposefully because it wasn't working the other way.
So momentum is fascinating to me, especially in sports, and this is going to be kind of a silly question. How much does the crowd matter, momentum-wise, in a game, right? It shifts. Is it the crowd that we're actually listening to, or do we feel the energy from the team that's on the field?
I would say the crowd matters when they cause penalties. Okay. So especially and if you have like a younger quarterback or a rookie quarterback and the crowd is very noisy, an away crowd, and they can't, you see them covering their ears and whatever, and they delay of game penalties, like mistake-wise, the crowd can matter. Last year when we didn't have crowds for, there was no home field advantage. So there is something there, some places more than others. I would argue a lot of that also has to do with like rookie quarterbacks being used to things or not used to things, because you see it. What I can't hear you, that kind of thing. So I think there's more mistakes from the crowd, but I think a lot of it has to do with, the Bengals didn't have a home field advantage, and they came back and beat twice they came back and beat the Chiefs. One was at their home, but one was away, and that's a notoriously very loud stadium and like hard situation. So, I mean, I don't know. That's for someone way smarter than me. Like that is a question for someone who is a lot smarter than me.
I've always been curious. The Packers do it all the time, right? They stand on the sidelines and they try to rile the crowd up, and I've always wondered, does that matter?
I think that there's probably things that like being at home and having your normal routine, being on your same time zone. I think those things are probably a bit more.
Yeah, being accustomed to playing in -10 degrees.
Yeah, I mean, I'm from Michigan. I don't want to go to -10 degrees ever again. I mean, I never need to go back to it.
Me neither.
Ever.
No thanks. No thanks. Okay, so drawing the parallels to investing, then the fundamentals that we look for, and this is really important this year to everybody that's listening. We have to look at fundamentals more because we're heading into a tightening cycle, and the era of zombie companies, the era of easy money is coming to an end, not quite ending yet, but coming to an end, which means that fundamentals matter. And we look at things like earnings season, right? What's the earning strength of a company? What's the cash flow strength of a company? Can they internally finance? Because it's going to be harder and more expensive for them to get external financing as rates go up. Momentum, on the other hand, now you talked about 4 games, which is interesting that there's an actual measurement for you. Momentum, we look at things like a 50-day moving average, a 100-day moving average, a 200-day moving average, and there's these cross points of, you call it the death cross if one of the moving averages moves below the other moving average, or if just the price of the stock touches one of its moving averages, a lot of times it bounces back off. So that's sort of a momentum indicator. And here's what I would say about momentum, though, is there's sayings, you hear the saying all the time, don't fight the Fed. There's also a saying, don't fight the trend.
Right.
And the trend is following momentum.
Yep.
But the tricky part is, at some point, the trend must end, right? And it's calling when the end is going to be, when's the inflection point. And that's why it's difficult, and that's why not everybody wins every single time.
I think it's interesting. I would say the parallel there for me would be, so the trend is your friend in terms of, so for football, we've seen, coming out of college, more mobile quarterbacks. Quarterbacks are less pocket passers. You don't see guys just standing back in there and dicing people up, more like Tom Brady. That's what we're sort of used to with Tom Brady. You're seeing more mobility, more throwing on the run, all of these things that reflect different things that are happening in college. Well, then defenses are now constructed to stop that. So now offenses will go back to do, you do see the kind of reemergence of before you never had like calling someone a slot corner was like, ooh, he's a slot corner now. Like it was a bad thing. And now you're starting to see like a slot corner be valued, like call him a nickel. We rebrand it, right? He's a great nickel, right?
Yeah.
But the point is like now they're using tight ends in the pass catching game. So then now you would put a bigger personnel there. Well, then you see if there is a team that wants to use a running back, like Derrick Henry's kind of a throwback running back. He doesn't really catch passes, but he's bigger, and defenses have a hard time stopping him. So it's chess, right? It's like, when are you gonna? Okay, this is. And by the way, it's very hard for a team to play like if you've played a Derrick Henry, then you go play like a Patrick Mahomes the next day, like that, or the next week. That's a hard transition. So it's really calling the end of like when are we gonna see quarterbacks go back to more traditional pocket passers, or and then we'll construct our defense differently based on that.
Yeah. So you're touching on it right now, but the last big topic that I wanted to hit was longer term trends. And I'll give some examples from investing first, just to kind of frame it. longer term trends that have happened even since I came into the industry. I've been in the industry, I think 18 years now, which makes me feel super old, but
You were just a
18 years, thank you. 18 years. And I've seen things like ESG, so environmental, social, and governance investing, take off, where when I was younger in the industry, it was what we called a negative screen. So you'd have investors that said, okay, I just don't want to own tobacco or firearms. And you would just kind of screen that out of their portfolio. Now ESG is a whole vibe. It's this whole vibe of people want to feel good about where they're putting their money. They want to feel good about what it does to the earth. They want to feel good about, I don't know, it being a new cannabis revolution or whatever the case may be, right? And that's one of the big trends. Another big trend is just digitization that's come in. And the thirst from newer investors for technology, for growth, for crypto, right? Digitization of currency markets. So those are some of the big trends that have happened in investing. What are some of the trends that have happened long term in the game?
Well, we had a couple of things happen. First, like we have a game we announced just recently, like yesterday, I think, that we're going to be playing in Germany. So some of our things are more international reach in terms of like bigger picture business-wise for the NFL. We've obviously started to dip our toe into like interesting emerging markets, meaning not just internationally, but like we are now talking about ways to work with gambling. We have 3 gambling partners. We've never had that before. With 3. And, you know, DraftKings, FanDuel, and Caesars are all our official partners. And we're talking about content and telling stories in different ways through different lenses because our fans are getting smarter. And part of that is a reflection of how the game's becoming. I mean, we've done Hard Knocks. We did Hard Knocks in season this season. So you got a chance to like follow the Colts as the season was unfolding. You know, as people are more social media, more access to players, this storytelling is just kind of changing. And a lot of a lot of the players are now being asked to do things that, you know, players 15 years ago weren't. You know, like you see Patrick Mahomes everywhere, and it's good for him, but even Aaron Rodgers didn't have that much, you know, personal scrutiny at such a young. He's still pretty young in his career, so it's interesting to see how those things are developing. But on the field, especially, there's a lot of work being done around like, you know, health and safety and figuring out how to like make our sport for younger people who are like learning how to play the sport, like, you know, the heads up tackling, like all of these different ways to try to like ensure that as the sport evolves, like we're being and by the way, there's so many analytics about sports performance and, you know, how to stay healthy, and because you want your best players on the field. Right. So there's a lot of innovations going around that, which is actually very cool. And the tracking data that we have is incredible. So there's a lot of innovations around it to make the game more interesting, and part of making it more interesting is safer.
Yeah. You mentioned Patrick Mahomes. My 8-year-old niece has a huge crush on him. So if you know him, connect her. She would die.
For sure. I mean, like he's like one of the nicest. They're being expected to be really nice, open, available. Like, you know, he's one of the nicest people. Yeah. So I'm sure if he ever meets your 8-year-old niece, it would be lights out. She would lose her mind.
It would make her life. Mm-hmm. Okay, look, some comparisons. We've talked about earlier when we talked a couple days ago. Joe Burrow is like what type of stock? So
when I look at Joe Burrow, I'm thinking a lot about this one because Joe Burrow is very special because typically in your second season, if you go to he was drafted first overall, and then the Bengals drafted his former teammate from LSU third overall in the draft after that. Usually, if your team is drafting first, you are not a good team. Right. So the fact that he is making it to the Super Bowl in such a short amount of time, especially after coming back from this ACL, like he might be like early Tesla, like early, because
that's a big call.
That's a big call.
Yeah.
I think he's going to be really good because to do what he's done, he's the most sacked guy. Like everything's somehow not working in his favor, and yet they're at the Super Bowl.
Yeah. Just relentless.
But early, not now Tesla, early.
Yeah, because now it would be too expensive.
Way too expensive now.
Okay.
Right.
All right. So
he's going to get paid, but I mean, not yet. He's got a couple of years left of that. I'd say early Tesla.
Undervalued.
He's undervalued right now. But this is early. This is early Tesla. Like I think you're going to get like some. This one's good.
All right. Cooper Kupp.
Cooper Kupp's probably he keeps doing it. Everybody knows he's open, and he still manages to do it. He's like, I'm not going to give him. He's like more like an Apple, but like Apple now. People know he's already good, and yet he's still.
It's like, why are you still paying for this?
Why are you still? But he's still performing.
Yeah.
So I think he's like
Yeah.
he's like Apple. Like he's like
Okay.
a nice. I mean, it's expensive to get in, but it's gonna be worth it.
Okay. And now I'm going to take the two teams. And now, for everybody's knowledge, we're recording this before the Super Bowl, so we don't know who won. But you're going to hear this after the Super Bowl, so you will know who won. But both teams. So the Rams or the Bengals, are the Rams traders or investors?
The Rams are traders for sure. I mean, They built Von Miller in the middle of the year. Odell Beckham Jr. He was released by the Browns. They picked him up. They're definitely they're very. They haven't picked in the first round since Jared Goff. So they're not building their team. They're traders for sure. This is a free agent plethora. I mean, Matthew Stafford's was a trade as well. So.
And the Bengals?
No, they're investors. I mean, Joe Burrow's a draft pick. I mean, you could go through a lot of, obviously Jamar Chase was a draft pick, but you can go through a lot of they did bring in a couple of free agents on their defense that did make a big difference, but when your quarterback is your number one pick and you went all the way in for him, I have to call you an investor then.